How's it going, everyone? And welcome back as always to Continues to Tick. So it has arrived. Whether slow or fast, whether wanted or not, the fourth week of November is here. Meaning with it has arrived the Thanksgiving holiday of 2021. And guess this, December starts next week. And sure, don't let me get too ahead of myself, because I'll run with it. But I just have to go there for a second, at least for a second, so just bear with me. But I can't help but think back to the crazy and wild start to the year of 2021. Back in January, and honestly just being scared of how it would all play out. And here we are now, soon to be in the last month of the year. Not too scary after all, I'd say, and I'm hoping you may be able to say the same as well. But now back to today. So I guess next time I see you, I'll be saying the countdown begins. I hope you guys are ready for that, for 2022, because blink and it'll be here. But I guess first, our main objective is just to remain safe. It's always a blessing to see the new year arrive. With this said, this week's video hopefully won't be too long, but no promises, as I have some weekend warrior stuff to take care of. As you noted by the title of this week's video, I wanted to share with you my personal thoughts on why it is that long-term investing appears to be so difficult to actually do. Like you may be asking, well, Jesse, long-term investing just means I buy an investment, like a stock for example, and hold for at least 1 year, right? My response is yeah, but why is it that this is actually so difficult for us to do for the long haul, such as over a period of 5, 10, or even 20 years? Why is it so difficult to follow through on the aspect of let it ride, on the aspect of do nothing? It seems quite simple enough, right? Well, let me explain why I think that is. So when I first started investing, back in college, at the age of 21, I told myself the stocks I buy now, I plan on holding onto quote unquote for the long term. However, as the short time went on, I sold anyway, thus lying to myself, despite my plan at the time. But luckily for me, some of them, maybe a majority of them, were for a profit, and on the ones I wasn't doing so well in, well, I held on. Holding on often for a loss, in the hopes for a rally return. You see, holding for the long term is difficult, I believe, because the emotions like the ones I experienced in college come into play, such when gaining or when losing money. Wrap this with the poorly thought of plan, or indecisive mindset, and it really does become an interesting recipe, aka not fun. Weird how this experience ultimately turned me into a boring dividend investor. But the thing was, when I would see green, I'd see the gains, I'd feel happy. I like using the word ecstatic even. And in this state, I couldn't help myself but to think of the now, despite my plan of wanting to think long term, or what I thought at the time was long term. And two things would happen. I'd either need the money and take it, or I'd feel I can make more, get greedy, and risk it further. It eventually became a double-edged sword. I tried to balance in the middle, and well, how long can you handle a double-bladed knife without getting hurt? Inevitable. And of course, the opposite happened in a losing case, but hopefully you get the idea. Well, these same strong, polarizing emotions, I believe, are what constantly get in our way of investing for the long term. Or to simply put it bluntly, we simply get in the way. And it's no fault to our own. Feeling emotion is amazing. However, emotion can also be damaging. Thus, it's important to practice funneling this emotion, especially in aspects such as finances, which are often unforgiving. Therefore, it's critical when thinking about being a true long-term investor to have a strong starting plan and a strong ending goal. In my personal case today, given that I had a strong starting plan and continue to have a strong ending goal in place, I rarely look at individual stocks' performances. And the great thing about being a dividend investor already, market swings mean even less to me now. On top of this, as we often invest for the dividends first, and growth of a holding second. So what does this mean? It means no more emotional investing from me. I don't enjoy it. Today, for example, when I do feel discouraged about my portfolio's performance, I often will look at my portfolio's whole performance for the day, and then look at the Dow Jones and compare. Is it just me or is it the entire market? And it nearly always is the market. And sticking with the market is not a bad thing. It may definitely be boring. However, at least for me, the less emotion I have attached to my portfolio, the less inclined I am to try to beat the market itself, and the less likely I am to try to engage in excess trading activity. And the less I trade, the more long-term my investing style automatically becomes by default. And I'll end today with this. When it comes to my investments, I'm learning that boring is amazing. People complain about watching paint dry. I'm one of them. But just like watching paint dry, there is predictability. Like when you first paint, you know it's wet, and with time it'll dry. It's usually only boring because you know the exact outcome, each and every time. Now, why wouldn't you want that with your money? Wait, what? Well, that may have been a lot to take in, but hopefully you can break it down as we take the time to like the video and subscribe. And this week for the Mind Cleanser, we get a picture of a pack of turkeys. Happy Thanksgiving, y'all. And as we continue forward with the video, here we are this week in the Jesse's cash flow portfolio. We've made some progress. It doesn't reflect it now, but at some point this week, we did cross the 42K mark, but I'm not taking credit for it just yet. It has to be there at the time of my video. But here we are this week, currently at $41,983.19. And this is on the all-time charts, of course, with an all-time return of 36.47%. And let me just zoom in here because we can, as this equates to a total gain for the portfolio of $6,303.55. And this is from market gain alone of $5,500. And this is with earned dividends, now having crossed the $800 mark at $803.52. And just to show you this last week's performance, like we said, we did hit 42, but we dipped below it again. Last week wasn't the great week, and as you can see here, it does reflect that. We had a negative 0.58% return for the portfolio, which equated to a negative $243.90 loss, which is going to happen from time to time. And like as we were mentioning earlier, we have to try to detach the emotions from our finances, especially if we want to make it long term. Investing, the more boring it gets, I think the better it becomes. And just because I don't mention it often enough, if you are curious about, exactly what it is that I'm holding, you can always take a look at my description box down below. There is a link, and just as M1 is known to do, they allow you to share your pie. So click on that link and you can check out my pie, and you can see everything that I'm holding. So take a look if you're curious. And as for the activity section this week, we got some action, and we also had a stock split, as you can see here. And this one was from O, similar to the one that happened with IBM. So on November 15th, O Realty had a stock split, and they gave me some shares of what looks to be Orion Office REIT of $41.02. Well, as you can see here, I did liquidate it on November 16th. So I'm gonna ride with what I know, and if I don't know it, I'm gonna liquidate it. I'm just not too interested in adding to my portfolio at the moment. And then here we continue back on November 15th, getting paid by Alliant Energy Corp, $3.38. And then also on November 15th, getting paid by Procter & Gamble, $5.22. And here's O, paying us $4.27 in addition to a stock split, which as you can see here, was valued at $41.02. So pretty good. I mean, I'll take it. And here we are on November 17th, continuing with our consistent game plan of investing $500 every single week into this portfolio. And also on November 17th, pushing these funds, along with the dividends, and along with this liquidation sell, back into the portfolio, and having a snowball of $57.84. And yes, you know what time it is. It is time for the weekly polls. It's a little segment that I've been adding to my videos. I really enjoy doing them, and I think they're a lot of fun. I really enjoy the engagement from you guys, I just think it's really awesome to just have a little discussion board. I mean, if ultimately I can find a way to actually create an actual discussion board in the future, but I really appreciate it. And honestly, being able to just take a dive into your guys' minds with your responses to some questions that I feel are really challenging to answer. And sure, they're deep. I just think it's really neat. I think it's awesome. So for this first question, if you had the ability to know exactly how your future would play out, would you want to know? The choices were yes or no. And as you can see, the majority of people said no. They wouldn't want to know. And I fall into this camp as well. It's a challenging question to answer because, I mean, sure, I could definitely see the benefit to knowing exactly what the future holds. And maybe you'd be able to do something about it. But as people have noted, maybe in knowing, you actually change your future as well. So it gets really interesting. But the reason for me choosing no, it's primarily surrounded about the idea that if I did happen to just know the future, I think I would change as a person. Whether for good or bad, maybe I'd be depressed, who knows. But I just feel like it's really hard to be able to know exactly what's going to happen to you and just not change because of that. And maybe even because of that, like we said earlier, maybe we even change our future. Who knows? It gets weird, right? And for the second one, let's try this one. So I gave you the options of picking whether you'd rather be rich than wealthy or you'd rather be wealthy than rich. A little bit more of a lighthearted one. There's a difference. For me, I personally feel like wealth to me means having a solid foundation, having something that is actually there. It's not momentary. It's just you in your life, having a lot of investments, having a lot of things that bring you money versus just being rich and just having money. Rich to me presents as something that's momentary. You can go out and win the lottery and you could become rich, or you can over time slowly become wealthy. And I think there's a difference here. And that's going to be it for this week's video. Thank you so much for sticking along with the journey. I didn't want to point it out in the beginning of the video, but I'll point it out now. We had just crossed the 700 subs mark. And considering I started this YouTube channel back on August 25 of 2020, the grind has been long, but it's been fun. And honestly, every single week that I'm here, it allows me an opportunity to just be accountable. Every week that I come on here, I talk about consistency. Well, what better way to be consistent than to upload a video on YouTube every single week? So as long as I'm here every single week, I hope you can get the bigger picture from this channel. That time passes, and consistency is important. And hopefully with that, we continue to grow this channel. We continue to bring people that are like-minded here. And hopefully over time we could slowly start building a community here. I think it'll be really neat. So with enough of that little ramble out the way, I hope you guys have a great Thanksgiving. We can't go back in time and push it further. It has arrived. So be safe, have a good time, celebrate as you will, and I'll see you next week. As always, take care.